Picture this. You're sitting at your kitchen table in January, staring at a stack of tax documents, when suddenly you realize that the government has been quietly funding your dream vacation to Italy all year long. No, I'm not talking about some secret government travel program. I'm talking about something far more powerful. Understanding how taxes work in your favor to turn every paycheck into a potential plane ticket, every deduction into a hotel night, and every smart financial move into memories that last a lifetime. Most people think taxes are just this annoying thing that happens once a year, like getting a root canal or watching your favorite TV show get canceled. What if I told you that taxes are actually your secret weapon for planning incredible vacations? What if those boring forms and confusing deductions could literally pay for your next adventure? Today, we're diving deep into the fascinating world of tax-optimized vacation planning. By the end of this video, you'll know exactly how to leverage the tax code to fund your travel dreams, plan strategically around tax seasons, and even make your vacations pay for themselves. This isn't about cheating the system. It's about understanding the system well enough to make it work for you. Let's start with the most obvious connection, your tax refund. The average American gets about $3,000 back from the IRS each year. That's literally a European vacation sitting in your bank account every April. But here's where most people go wrong. They treat their refund like found money, like winning a scratch-off ticket. They blow it on random purchases or let it disappear into their regular expenses. Smart vacation planners think differently. They see that refund as their travel fund, their ticket to experiences they've been dreaming about all year. But here's the really clever part. Instead of waiting for that lump sum, you can actually plan your entire year around it. Know you're getting $3,000 back? Start booking flights in February when prices are lowest. Reserve accommodations early when you have the best selection. Your future refund becomes your present vacation reality. Now let's talk about something even more powerful. Adjusting your withholdings. If you're consistently getting large refunds, you're essentially giving the government an interest-free loan. That's money that could be earning returns or funding monthly vacation savings throughout the year. By tweaking your W-4 form, you can increase your monthly take-home pay and create a steady vacation fund that grows every single paycheck. Here's how this works in practice. If you typically get a $3,000 refund, you could adjust your withholdings to get about $250 more per month. Set up an automatic transfer of that extra money into a dedicated vacation savings account. By the time summer rolls around, you've got your travel fund ready to go, plus you've earned interest on that money instead of lending it to Uncle Sam for free. But we're just getting started. The real magic happens when you understand how different types of income affect your vacation planning timeline. If you're self-employed or have variable income, your tax situation is completely different from someone with a steady paycheck. Freelancers and business owners often have irregular income throughout the year, which means their tax planning needs to be more strategic. For self-employed individuals, quarterly estimated taxes create natural vacation planning milestones. You're already thinking about your finances 4 times a year: January, April, June, and September. These become perfect checkpoints for assessing your vacation budget and making adjustments. Did you have a great quarter? Maybe it's time to upgrade that hotel reservation. Slower than expected? You can adjust your plans before you're committed. Self-employed folks also have access to business deductions that can indirectly fund vacations. Home office expenses, business meals, professional development. These deductions reduce your taxable income, which means more money in your pocket for personal expenses like travel. The key is understanding exactly what qualifies and keeping meticulous records. Now let's explore one of the most overlooked strategies: timing your vacations around tax seasons. This isn't just about when you file your return. It's about understanding how different times of year affect both your finances and travel costs. January through March is tax preparation season, but it's also when travel deals are incredible. Airlines and hotels are desperate for bookings during these traditionally slow months. If you're expecting a refund, you can actually book and pay for trips during this period, knowing your refund will cover the costs. Credit card companies love this strategy too. You can put vacation expenses on a rewards card, earn points or cash back, then pay off the balance when your refund arrives. You're essentially using the timing of the tax system to maximize your travel rewards. Spring brings refund season, which coincides perfectly with summer vacation planning. This is when you should be booking accommodations and flights for peak season travel. Summer might be expensive, but if you're planning and paying with tax refund money, you're already ahead of the game. Fall presents unique opportunities for tax-savvy travelers. September through November is when you should be thinking about maximizing deductions for the current tax year. If you're planning end-of-year travel, certain expenses might be deductible. Business conferences, professional development trips, or relocations can all have tax implications that reduce your overall tax burden. Let's dig deeper into travel-related deductions that many people miss. If you travel for work, even partially, you might be able to deduct portions of your trip. The rules are specific. You need to be traveling primarily for business purposes. But if you extend a business trip for personal reasons, the flight costs can still be deductible while you only pay for the extra hotel nights. Educational travel is another goldmine that most people ignore. Taking a course, attending a conference, or pursuing professional development while traveling can create legitimate deductions. Online courses have made this even easier. You can literally take a tax-deductible course from anywhere in the world. For those with flexible spending accounts or health savings accounts, understanding how these interact with travel can create additional savings. HSAs can be used for medical expenses while traveling, and if you're traveling for medical reasons, even more expenses might be deductible. Here's where it gets really interesting. State tax considerations. Some states have no income tax, others have high rates, and this can dramatically affect your vacation planning strategy. If you're in a high-tax state, your refunds might be larger, giving you more vacation funding. If you're in a no-tax state, you might need to rely more on federal strategies. Retirees have completely different tax situations that create unique vacation opportunities. Social Security benefits, pension distributions, and required minimum distributions all have specific tax implications. Understanding these can help retirees plan extended travels during lower income years or time trips around distribution schedules. The psychology of tax-funded vacations is fascinating. When you use refund money for travel, it feels like free money. You're more likely to splurge on experiences, try new activities, and create lasting memories. This psychological boost makes tax-funded vacations feel more rewarding than trips paid for with regular income. Investment income also plays a crucial role in vacation planning. Capital gains timing, dividend distributions, and tax loss harvesting can all be coordinated with travel plans. Realizing gains in low-income years or timing losses to offset other income can free up money for travel while minimizing tax impact. As we look toward the future, tax laws continue evolving, creating new opportunities for savvy vacation planners. Recent changes to standard deductions, child tax credits, and business expense rules all affect how much money you have available for travel. Staying informed about these changes helps you adjust your vacation planning strategy accordingly. The key to successful tax-optimized vacation planning isn't just understanding the rules. It's thinking strategically about timing, maximizing opportunities, and seeing the bigger picture. Your taxes aren't just an annual obligation. They're a financial tool that, when properly understood, can fund incredible experiences and create lasting memories. Remember, every dollar you save on taxes is a dollar that can go toward your next adventure. Every deduction you maximize is another night in that dream hotel. Every smart financial move brings you closer to experiences that enrich your life far beyond any material purchase. Start implementing these strategies today and watch how understanding taxes transforms from a dreaded chore into your secret weapon for funding the adventures you've always dreamed of taking.